Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including some improving global news. The American job market chalked up some solid progress in June with better than expected results, bolstering evidence that their economy might be strong enough to grow with less help from the Federal Reserve. The data sent bond investors rushing to sell, and US Treasuries reached their highest yields in 2 years. The US Federal Reserve's tapering plans completely overshadow the bond market. The rise in yields threatens big bank capital as bond prices fall, and banks who are required to hold this paper as part of their capital will need to write down their investments. Japan seems to have some wind in its sails at long last. The initial optimism about Abenomics seems to be being borne out. Growth may be picking up marginally in the US and Japan, but it is tracking the other way in emerging economies, says the IMF. They are saying they will be lowering their 2014 forecasts because of the trend. Portugal has pulled back, temporarily at least, from a government collapse by patching together a political deal to sustain the Eurozone bailout plans. And oil prices remain high as US benchmark prices rise to match international levels. But curiously, US petrol prices are not rising too. Infrastructure changes now allow US Midwest oil flows into the international markets. At the same time, natural gas prices continue their relentless fall as supplies grow. The rises in our petrol prices are due to self-imposed tax increases and a falling currency rather than crude oil price changes. Gold fell back again in late trading in New York, and the New Zealand dollar starts today sharply lower at 76.9 US cents on the US jobs report and is under 77 for the first time since June 2012. It's at 85.2 Aussie cents and the TWI is at 73.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.